Okay, folks, welcome to the member stock pick request video. This is a service that is a part of your membership, so please, I encourage you to take advantage of it. If you're looking at stocks you want a second opinion on, you want me to take a look at the charts, go over them on video, then I'd be more than happy to do so. So let's begin with JT's requests. He's got two requests. The first one up is Wet Seal, WTSL. We traded this one recently. We booked profits on it. This is a weekly chart. Let's begin with the 30,000 foot view. And we rallied up to $1.11. We've now pulled back. The past 2 weeks we've seen bottoming tails, which is a sign of support. And now we have an inside week so far this week. Now let's jump forward to the daily chart. Daily chart, RSI is in an uptrend, possible double bottom off of this lower band of the pennant formation. The stock price is managing to hold on to the 50-day moving average. Now, I would be more aggressive with a buy call on this down here near the lower band. It's rather difficult for me to say go ahead and buy here. However, if you wanted to nibble and allow the stock to rally and trade above the upper band of the rising uptrend channel, the 3-day rule would be in effect, and then add on that third day and look for a breakout higher. There are shorts in this name, so there is a potential for a short squeeze. I will call your attention to the up volume. The up days that we've seen over the past several days have been declining in volume, so that's a concern. So this is a show me stock, needs to break out before I got really aggressive with it, and volume does need to rise. Next stock up for JT is SYMX, Synthesis Energy Systems, weekly chart. JT, I'm not a lover of this stock until it gets down to $1.53. See whether or not it bounces around, find some support there. That is historic support. ADX line, very, very overbought. Could pull back further. We're seeing breakdowns on the Williams percentage R. Daily chart. You can see the resistance at the upper band of the declining downtrend channel. We had a key reversal a few days ago. We break down below 1.53. We're going down to 1.39. You may want to look for that to be your entry point because it has acted as good support several times in the past. So right now, I would avoid the stock until the stock got a little bit cheaper. Note how you're putting in a lower high on the slow stochastics, finding it difficult to rally past the 50 or neutral level. Short interest, you have a few days worth of short squeeze here, not much. Fundamentals, yeah, quarterly revenue growth which is blowout, no earnings. So my guess is that this stock is coming off of fundamentally very poor performance to have astonishing revenue growth like this. So my catalyst would be a short squeeze, and you don't have all that much of a short squeeze potential here. The 3 days, 4 days tops. So I would avoid this one because it's breaking down. Next stock up is for Kevin, HST, Host Hotels and Resorts. This one I'm going to start off with the weekly chart. You can see how it's blown out of the upper band of the rising uptrend channel. It's been a very, very strong uptrend. I think that this is going to take a pause, and we're probably going to correct further, at least to alleviate this overbought condition. You can see how we're pulling back on Stoch RSI, making a lower high. This is a weekly chart. The week's not over yet. Very, very extended on Williams percentage R. We haven't come back down to below 80 since this time last year. So we're due for a pullback on HST. Inside day today, that's after we saw topping tails at 23. So $23 per share is resistance. Kevin, I think that you're probably going to see a further pullback. So if you're looking to get long, I would look for a lower low to get long at. Volume was very, very weak today. So I wouldn't short the stock. However, I think that you're going to get a better risk to reward entry point, say at 22.67, thereabouts in that neighborhood. Watch for bottoming tails. Short interest, ton of shares short, 43 million shares short, over that actually, and 3-month average daily volume just shy of 7 million shares. So you have a multi-day short squeeze candidate here. Great earnings growth, good revenue growth. So it's a nice stock, and plus it pays a dividend. So I get why you've had this run-up. It's been fueled by good fundamentals, a dividend, and a short squeeze, but it looks as though it's starting to peter out here, so this is definitely not a stock that I would be looking to long right now. Next stock up for Kevin is Rmx Rubicon Minerals. This is a stock traded on the Toronto Exchange. The takeaway that I have on this daily chart is that, yes, great parabolic move higher, a very, very nice move, but if you weren't involved with the stock yet, it's kind of, the horses left the barn, because you're already starting to see topping tails at 1.80. And from this point forward up to 1.95, it's going to be a struggle, because you've got buyers back here that want to be made whole. So you have overhead supply, good volume to the upside. So while I'm not saying that the stock can't head higher, in all probability it will, I just don't know whether or not it's worth the risk to reward to be chasing it up from here. I would rather see a consolidation, because the stock broke out above resistance so far this week. Does this mean that we're going to close here? No, it doesn't. It's Monday evening, so it may not close here. So I would prefer to see some consolidation and then a breakout higher. And then if we see a consolidation, some bottoming tails at 1.75, well, then you can begin to build a position. But my target would be, let's just round it down to $2 per share. And we're probably going to get there. No short interest data on Rmx. Okay, next stock up is for Jesus, KWK, Quicksilver Resources. Hammered hard. Broke down below 2.28, critical support. Now we're back down to support at $2 per share. We bounced off of that support level. Better to illustrate it, I'll use the weekly chart. We're really going to need to hold on to this support level, and we are oversold, no doubt about it, but we can get more oversold. We bounced off the lows, put in a little bit of a bottoming tail. What was the lower band of the declining downtrend channel is now acting as a bit of resistance, as noted by the topping tail. So in a situation like this, what you need to do, possible double bottom on slow Stokes and on Williams percentage R, we need to take a look at the 30-minute chart. And the 30-minute chart was still making lower lows. We rallied and we butted right up against this parabolic downtrend line and were rebuffed. Not a good sign. I would prefer to have seen it close above that resistance level. Volume to the close was low. We're breaking down intraday on the ADX line, which is actually good because it's a momentum indicator and the trend is down. The momentum is to the downside. So this is actually a good sign that this is breaking down some. So I can't advocate a buy at resistance on an intraday basis. If it pops higher, consolidates above this resistance level, and this resistance level then becomes support, then you may want to nibble on it. And I know there to be a lot of shorts. We have 38.12 million shares short, 3.6 million shares traded per day. So yes, there's a great short squeeze opportunity here. What you could do here is open up your position, put a stop loss order just below the lows of the day, but you got to get out, because if we break down and close below this support level, we'll have a one handle on the stock and we'll probably come down to 1.90, which on a percentage basis is going to be fairly big. So I would follow that rule and use that stop loss order on a closing basis. Volume to the downside has been very, very light of late. So I see the temptation to want to get long of this stock, but just understand where there's resistance levels and just understand that we need to hold this support level, or else really you need to stop out of the trade because we're going much lower to 1.88 to 1.90, and then you can look to open up a new position in the stock. Next stock up for Jesus is not one of my favorite gold miners, ANV. Weekly chart, it's broken down below this uptrend line. Looks like we're rolling over, making another lower low on Ultimate Oscillator. Stage may be set for a double bottom setup on Williams percentage R, which would be bullish, assuming you get the breakout. Let's go to the daily chart. All right, so daily chart, we're at some fairly good support at 3.38. I would be a buyer of the stock on a close above this declining downtrend line, and then the 3-day rule would be in effect. Note your up volume, though, very, very light today. So this is a show me stock. I would wait for it to break out of this triangle formation. Short interest, tons of shorts, 34.34 million shares short, 3-month average daily volume, 3.1 million shares. So a multi-day short squeeze candidate, no doubt about it. This is what it's always bothered me about ANV is the cash to debt. It's just astronomical. And that's my concern. So I believe there's better plays out there. Not my favorite play, but that's the reason why I don't like ANV from a fundamental perspective. From a chart perspective, again, I would go back, use this daily chart, watch for a breakout and a close above this declining downtrend line, 3-day rule, let it consolidate. This downtrend line should act as support, and then I would be a buyer. Next stock up is for fellow member Joseph, ITC Holdings. It's a weekly chart. 36 was resistance. It looks as though we closed above that level today for the first time in several weeks. Ultimate Oscillator is in a downtrend and trading below 50, which is very bearish. Choppy action on Williams percentage R. I'm not a lover of the weekly chart. I question whether or not we're going to be able to hold this $36 per share level. Let's check out a daily chart. Okay, daily chart of ITC. We broke out of a triangle formation today on fairly good volume. We're still trading below the 50-day moving average, which is now, I'll call it flat, but it's slightly declining, so it's going to act as a bit of resistance. You have resistance up here at 36.39. MACD went positive. You have a breakout on Williams percentage R and a breakout on the slow stochastics. Higher lows on RSI. So these are all bullish signs. So for me, the 3-day rule would be in effect. For new members, the 3-day rule is when you get a breakout in a market. Let me step back a second. The 3-day rule only applies to when I believe the markets are in jeopardy of breaking down. Were this a healthy market like we saw in February and you could buy a stock on the first day of a breakout, fine. I would have been a buyer back then on a momentum trade and I probably would have made money. However, more often than not, we're seeing breakout point failures, meaning we break out only to reverse and close lower. So in times like these, I want to see a pullback and a retest of what was resistance, meaning the upper band of the triangle formation. I want to see that now act as support. If I see that for 3 days, today being the first day, 2 more days above that level, I would be a buyer. Now, I think you're going to get that retest because on a 15-minute chart, you can see how we sold off into the close. I think we're coming back down to 36.10, maybe even slightly below it. We're going to retest the support level or this upper band of the rising uptrend line on a 15-minute chart. Stochastics are rolling over, So just be forewarned. There's a reason why the 3-day rule exists, and it's to protect ourselves against breakout point failures. And again, what's a breakout point failure? We break out only to roll back over and break back down into this formation, and more often than not, we break down below the lower band of what used to be support. So it's a fairly ugly event when you get a breakout point failure. So in these instances, I want to see a pullback, retest, and then you can look to get long. Next stock up is for James. SODA is the symbol. Before I get on to James's stock, let's check out the short interest on ITC. 6.77 million shares, less than 1 million shares traded per day. So you have a multi-day short squeeze opportunity. Huge earnings growth, beautiful revenue growth. So we have a stock that's got really good fundamentals, good short squeeze potential, and it pays a dividend. It's got the trifecta. So I like the stock, but the stock has got to, again, 3 consecutive days above this resistance level. Now should act as support. Now off to soda. Okay, daily chart. Again, if I didn't say this is for fellow member James. Let's first take a look at the weekly chart. Where are we so far on a historical basis? We're right at what is presented itself as being support back here, and back here. 3 separate times we found support at this support level. I would prefer to see the stock come down to 27.50, but this may hold. It may do. I would use a stop loss just under Monday's lows and look to get in at 27.50. I prefer this support level because it's more of an extreme support level, and you can see that we bounced off of it several times in the past. And what these bottoming tails tell us is that there are buyers waiting below. So SODA weekly chart looks good. We're at support. There is better support, but this will do. Now that it passed the weekly chart test, let's take a look at the daily chart. We've had several days of consolidation at $29 per share. Again, a breakdown below this support level. The lows seen today were 28.65. I would use just below that level as my stop point. And I will note that the up volume bars have been declining. Could be because it's a consolidation. Ultimate oscillator is drifting up. Choppy action on Stochastic RSI could be a higher low. Upper band of ADX is trending down. Bullish sign. MACD poised to go positive. Possible double bottom setup on your slow stochastics. Check out an intraday chart, because this stock is going to make a move real quick in one direction or the other in very, very short order. Rolling over on RSI. Some heavy selling into the close. It did hold support. So, James, I would really stick by my guns on the stop loss just below 28.65. I would not short the stock because you have 5 to 6 days worth of short squeeze potential. So that was soda. Next stock up is for Rich TMV. Before I get into this one, this is a leveraged ETF, folks. It's like the TZA leveraged ETF, so be forewarned. This is not for the faint of heart. Very, very volatile. Now, let's take a look at the weekly chart first. Weekly chart, thought I drew the support level. Bear with me one second. Okay, so last week we closed down below critical support. We found support at this level, at the, say, $46 per share level, several times before. Most recently in May, prior to that in 2013, a couple of times in 2012. Now we are at historic lows on TMV. So the fact that we've broken down below historic support is a concern to me. So off to the daily chart, We flashed a reversal. I wouldn't call it a key reversal. We did not close higher in the day. We did close off the lows of the day. Volume was fairly strong. This is a 30-minute chart. You saw some buyers come in the final few minutes of trade. If you see a pullback on Tuesday morning and you want to get involved with this one, fine. If you get a pullback, I certainly wouldn't chase it unless, of course, we were able to recapture prior support and then rally off of that level after consolidation. But if you wanted to buy it on a pullback, assuming that it does not break down on Tuesday morning below 45.08, then you could do so. I would just use this 45.08 level as a stop loss point, because if you trade down below there, remember, there are no buyers below. There is no support. So the ETF, this leveraged ETF that puts you short of the 20-year bond, is probably going to go considerably lower. So just be careful with this one. Very, very volatile. Weekly chart, again, it is below historic support. Next stock up is for Allen, Cste, weekly chart. Possible head and shoulders setup here, Allen. Left shoulder, head, right shoulder. Here's your neckline. All right, so just keep that in the back of your mind. It doesn't mean that it can't be traded. We just want to know that there's a bearish setup that is forming. Let's just be aware of it. I've seen more often than not head and shoulders setups negated and the stock or index head higher. So by no means does this mean that the stock is going to break down below and break this neckline. No, it's just a warning flag is on the track is all. Now let's take a look at the daily chart. Daily chart is, let's face it, is not pretty. We're in a strong downtrend. We've gone a bit parabolic. I would not be a buyer of the stock until we got some sort of a rally above this upper band of the declining downtrend channel. Ultimate oscillator is looping up. I don't like the fact that this ADX line is pushing higher. You could see that there was some indecision today, as noted by the topping tail and bottoming tail, small body on the candlestick. That's indecision. It's not quite a doji star formation. So very, very soon it's going to make a directional move, higher or lower, but it's going to do so very aggressively. So it's anybody's guess which direction the stock is going to take. But whenever you're looking at a stock and you're trying to determine when it's in a tight formation which direction it's probably going to head, it's probably going to head in the direction of the overall trend, which is down. Let's take a look at a 30-minute chart. So we have a higher low on a 30-minute chart, topping action at the close. If you're going to go for this one, Allen, I would say you're probably going to get a pullback on Tuesday morning, because this candlestick shows that these buyers back here want to get made whole and they're looking for their money back. So you could add on a pullback or open on a pullback. I would use 45.62, a trade below that level on a closing basis as a point to get out. If you wanted to keep your stop really loose, you could use 44.97. I wouldn't. I would just go with the 45.62. Trades below there, you're probably coming back down to 44.97. You could always get back in the future. Short interest. You don't have much in terms of a short squeeze here, basically none. So I would not trade this as a short squeeze candidate. Good earnings growth, good revenue growth, so fundamentals look strong. Little divvy it pays. So I don't see a rush to get involved with this stock just yet. Pullback, you can open up a position, just a trade below or a close below 45.62. I would look to get out. I like the slow Stokes looping up on a 30-minute chart. STXS, we opened up a position on this today. This is from fellow member Karen. She wanted me to take a look at this one. And this is a weekly chart. We've been watching the stock for quite some time. We broke out in July of 2013. Since that point in time, we have consolidated nicely. So the longer the consolidation, the stronger the move higher. So I love this support level. It's, to me, it just screams, you got to buy me. So we're going to use a stop loss, say just below last week's lows of $3.09. Maybe we'll keep it at $2.99, give it some room. But I think this one's going to head higher. Let's take a look at the daily chart. Really great key reversal today. They tried to take it down, failed, rallied right up into this resistance level. After we opened up our position, the stock just took off. So we're already profitable on the trade. And note how we backed off of this upper band of resistance. So when would I look to add to this trade? The 3-day rule. We need to break out. I would not buy on that breakout. I would wait for a pullback and a retest of this support level. Consolidate for 2 more days, and then I would be a buyer as long as we hold this breakout. If it fails, well then, more than likely, it'll come back down, take out support here, and we do not want to be a part of a stock that is flashing a breakout point failure. We will stop out well before $2.99 if that occurs. Oscillators are breaking out. Really nice chart. STXS looking good. Let's take a look at a 30-minute chart. You can see resistance at the 200 period moving average on a 30-minute chart. Good volume into the close. And the key reason of why we like STXS is the short interest. You have 1.24 million shares held short, average 3-month daily volume, 155,000 shares, a multi-day short squeeze candidate. Forget the fundamentals, throw that out the window, no dividend. It's all about the short squeeze. And that's it, folks. If you have any questions, shoot me an email. And please, if you're new to the Contrarian Trader, you're not taking advantage of member stock pick requests, please do so. Send me in your symbols. And for those folks that are still looking to give me feedback on the members dashboard, which is still in beta testing, please send that in to me. I would really, really appreciate it. I want to get that information over to the developer, get it wrapped up, and get it launched for all to use. Have a great trading day on Tuesday, folks. May it be profitable, and let's stick by those stops. Be well.